It's already 7:03. I think we should start. So let me first of all introduce our two superstars here, Jana and Callie. They are the one who gonna be the providing the information, and my job will be to basically discuss some scenarios possibly, and see how we can turn your rent into your mortgage, and see how you can get out of that paying somebody else mortgage, perhaps if they have a mortgage, or so you pay towards your own purchase, right? And Arjun, again, thank you for putting this on for us. And it's important that we get the right technology. So thanks for quarterbacking this.
You're welcome.
And so without further delay, Jenna and Kelly.
Okay, thank you so much, Emmett. Can everybody see my screen okay?
Yeah.
Okay, fantastic. So we're going to talk a little bit today about the New to Canada program that we have available through our brokerage channel. We're both mortgage brokers. I'm Jenna Nash McCabe, and on the right hand of the screen is Kelly Dean, and we're both mortgage brokers at Dominion Lending Center's Integra Mortgage here in Kamloops, but we actually facilitate mortgages all across Canada. So today we're just going to talk a little bit about the mortgage financing process, and then also a program that we have available in our broker channel that's specific to New to Canada, and it's an insured program. So we'll just talk a little bit about the differences and what that looks like. Sorry, my screen's just frozen here. I want to talk about two mortgage classifications that we have here in Canada. So before we get into the presentation, I just want to give you an overview so that as we go through, you kind of have an understanding of what I'm talking about. So mortgages can either be high ratio, which are also referred to as insured mortgages, or a conventional mortgage in Canada. So a high ratio mortgage is a loan for more than 80% of the property value or the purchase price. And this is where the down payment is less than 20% of the purchase price. A high ratio mortgage has to be insured against default with a mortgage loan insurance provider such as CMHC, Sagan, or Canada Guarantee. So this insurance is an added fee on top of your mortgage amount, but it can be added into your total mortgage loan amount. Second type of mortgages that are available in Canada are known as a conventional mortgage, which is a mortgage loan equal to or less than 80% of the value of the property. And this is where your down payment is at least 20% of the purchase price. And conventional mortgages don't usually require that extra mortgage loan insurance, so there's no extra added fee there. So I'm just going to pass it over to Kelly to talk a little bit about the mortgage financing process.
Thank you, everybody, for joining us. So as Jenna mentioned, there is two different types of mortgages that we can obtain here in Canada, being the high ratio and then the conventional. But first, we really wanted to chat with you about starting the mortgage finance process is never too early. So the biggest ask we can have is that we outline the mortgage process and then start planning with you guys, involving a meet, getting to know where you want to be located in Kamloops, and really creating that plan and getting to know where you want to be. So I always say to clients and consumers that there's never really too early time to get your mortgage process started. So one of the first things is getting your documents prepared. So for step one, it's really gathering all your documents and your personal information that we are going to require to submit to the lenders and the default insurers, as Jenna mentioned, which is CMHC, Sagan, and Canada Guarantee. Again, personal information. So what that is going to be looking like is your valid work permit, verification of your permanent residency, speaking in regards to these two programs, Canadian issued government ID, as well as your proof of income with your mortgage application, which is your letter of employment and your most recent pay stubs. We like to have two. Again, we're going to be looking for proof of savings and investments. And this is your down payment and where these funds are coming from. So again, when I'm talking about planning, it's really setting you guys up for success. If we're looking at different types of down payment strategies, that we have this plan in place, because a lot of times our Canadian finance institutions will always require those funds to be held for approximately 90 days within Canada. Other questions that we're going to ask are details of your current debts and any other financial obligations inside Canada and outside as well. And again, that proof of down payment linking to the savings and investments. And then for your next step after that would be step 2. And it's getting prepared. So once we have all your documents gathered together, it's going through the mortgage application and diving a little bit deeper into what those questions are of how long you've been in Canada, what your residency could look like. At this time, this is when we're going to pull credit through Equifax, and it's really a full financial snapshot of your situation and allows us to provide the best situation for your solution for your home needs. And then step 2 really, or sorry, step 3, is there any questions of me? Sorry, I'm trying to keep this pretty open.
No, I mean, we can have a Q&A in a little bit, yeah, but.
So for step 3, oh, sorry, I just lost the screen. This is where we're going to be putting an offer in with Amit. And Amit's really going to guide you through your whole purchase process and putting in that offer. Where Jenna and I would be involved is making sure that we get a copy of that offer to purchase at that time. And as well, ensuring that the appraisal gets ordered through the proprietary channels through the lender's approved appraiser list. Again, one of the things we do recommend is a home inspection, and again, Amit can really help guide you through those steps. Once all that part is done, that is when we start looking at removing your subjects and getting your lender's final approval. You and your realtor will ensure that all the subjects for your purchase are met upon, and this is where we can remove them. At this time, we would send your information over to your lawyer. In Canada, we need a lawyer to facilitate your real estate transactions. And again, this is where you would reach out to your lawyer, which we could recommend, and Amit can, and have everything together for your real estate purchase. Usually this is done within 1 to 2 days prior to your completion. Some other costs that really need to be taken into consideration when you are buying a home is your home, as we had mentioned a little earlier, is your home inspection. Those can run you about $500. Legal fees and transaction purchases are about $1,500, as well as if there's a provincial tax. And again, that is something we can dive in a little bit deeper. With our mortgage app, it outlines it very, very nicely. So, but it is 1% on the first 200,000 and 2% on the remaining balance up to 2 million, which is a price we're not even looking at. And again, it's just making sure that we set you guys up for success, making sure that we've covered all the other ordinary expenses that we may not always look at when we're buying a home. And at this time, I'll hand it over to Jenna to discuss the New to Canada programs.
Okay, so I'm just going to talk a little bit about our New to Canada program that we have available in our broker channel and just kind of give you an overview of what that would look like depending on your situation. So our New to Canada program is a mortgage solution specifically designed to help new residents to Canada realize their dream of home ownership. So newcomers with permanent and non-permanent resident status who have relocated to Canada within the last 5 years and have limited Canadian history, this would be the program for them. Borrowers can utilize alternative sources of credit to prove their credit worthiness. So that looks like, I'll discuss a little bit more in a moment, but that just looks like we can use an international bureau or potentially rent letters from your from your landlord. So just some alternatives for you. And you can have as little as a 5% down payment for this program. So some specifics about this program is that it's for purchases only. The loan to value can go up to 95% of the purchase price. For an insured mortgage, if you do have that 20% down, then it's up to 80% of the purchase price that they'll loan you. Your down payment must be verified. So as Kelly mentioned, that usually typically looks like your down payment being in a Canadian bank account for a minimum of 90 days and just being able to show proof of that. Again, that minimum 5% down payment. If you do have that minimum of 5% down, then it can't be gifted or borrowed funds from anyone. If you have a down payment of a larger than a 5%, then we can look at using a gifted down payment from immediate family members. So just again, planning for your specific situation. The property type has to be an owner-occupied primary residence. You can have a home with a basement suite, but you would have to ensure that you are living in one of those suites. And so it's owner-occupied there. The next slide I want to talk about is just borrower qualifications. So the borrower is required to have a permanent residency or a valid work permit here in Canada. You must have relocated to Canada within the last 5 years, and you must have a minimum of 3 months full-time employment in Canada. One of the questions that we've gotten asked over the last couple of months is if you've come to study in Canada for say 2, 3, 4 years, does that cut into your 5-year relocation term? So we've reached out to the insurer just for some clarification on that, and typically in most situations they said that study time doesn't cut into the relocation time. So it's basically they'll consider it from when you're done your studying and you get your permanent residency or your valid work permit wherever you're at in this stage there, and they'll take the time from there. So within the 5 years of that. For all loan to values, so depending on if you have 5% down, 10% down or more, you have to have that valid work permit and verification of permanent residency. You have to have that income confirmation via the letter of employment as well as recent pay stubs, and then that down payment confirmation with bank statements in a Canadian bank account. Some specifics on loan to value: if you're looking to put 5 or just under 10% down and you're new to Canada and you're going to be using this new to Canada program, then we can look at using an international credit report or 2 alternative sources of credit demonstrating timely payments for the past 12 months. So this could be, again, via rental payment history confirmed by your landlord, and at least one utility payment, either a hydro bill, utilities such as gas, telephone, cable, something along those lines. And an important note on that is to make sure that all your payments are timely. So that means they've all been made on time. And that's what we can look at using rather than a Canadian credit bureau that we would typically pull for our other lending programs. With a loan to value of 90% or less, so that would be where you would have a down payment of 10% or more, we can look at using a letter of reference from your financial institution in your country of origin confirming a minimum of 6 months satisfactory banking relationship, or we can use 6 months verifiable bank statements from a recognized Canadian financial institution or from a financial institution in the country of your origin. An important note on that one is that all the letters must be in English. So the biggest takeaway here is just that you should be continually working towards having great credit and ensuring all your payments are made in a timely fashion. As you can see, this is a very crucial piece of the mortgage financing process. So again, we can't stress enough to plan, because buying a home is one of the biggest decisions you'll ever make. Being prepared and having a plan in place to achieve your goal of home ownership is very important. So we'll work with you throughout the entire process to ensure you're successful in getting that home that you're planning to purchase. Regardless of when you're planning to purchase a home, we can set up the financing process in motion at any point by securing a mortgage rate as well to guarantee. And we can do a pre-approval and get all those documents in place and give you a maximum purchase price and a maximum mortgage amount that you would qualify for. So that just, if by getting a pre-approval, we can figure out the supporting paperwork you need to provide as well to purchase a home in Canada. It's just about planning. And the last piece that I just want to talk about quickly is both Kelly and I have an app. It's called My Mortgage Toolbox that is available for download from the App Store or in Google Play. And this just actually gives you a lot of different information about different scenarios. So you have access to current interest rates. There is a purchase calculator on there. There's a land transfer tax calculator on there, which is important if you're purchasing a home in BC. It also gives you kind of a breakdown of different closing costs that you can expect to have to pay on top of your home purchase price. The stress test, which is what we use in Canada to tell you how much you can qualify for a mortgage. There's actually a calculator in there that'll be really helpful in helping you determine, given your current situation, how much you would qualify for. So that's all that we have prepared. I know that was fast and probably a lot of information, but we wanted to save a lot of time for questions.
Thank you, Jana. And thank you, Kelly. Can I do a screen share, Arjun, now? Can everybody see my screen or no?
I'll stop sharing mine. There we go.
Oh, okay. Can you share this, see this screen? Everybody can see the screen?
Yeah.
Yeah.
Okay. Okay, so Raman and everybody else who is able to see, Rishabh and Satnamji and M looks like we dropped him out for some reason, but now I want to show you how this is useful for you, because if you qualify for a 5% down payment and or a little bit more than that, then you can really save yourself a bunch of money. And just for example, Raman, if you don't mind unmuting, because I talked to you many things in life before, so you know my style very well.
Yeah.
Let's say how much monthly rent do you pay currently right now?
I am paying for one single room in an apartment for $600 per month.
$600. Okay. So two people living there probably?
It's a 3-bedroom, but yeah, 1 bedroom per person.
Okay, so $1,800, right?
Yeah.
Okay, so you are looking at $1,800 a month. Now, what I want to show you is this. So we might have to do a little bit different here slightly. Okay, so and you obviously you're living in Sahalicum somewhere.
I am actually in Merritt right now.
Oh, in Merritt. Well, what take you there?
I am a manager here at the 7-Eleven.
Okay, so are you gonna buy in Merritt?
It depends, Merritt or Kamloops. I don't know.
Okay, no, fair enough. I mean, doesn't matter. The math is math, right? It's the same as everywhere else. Okay, and these girls they work everywhere, so that's fine. Okay, so let's look at this. Okay, what did I do this time here? Oh, come on, I can do better. Okay, so I just want to use this example. I know we have a bunch of new listings came today. Like for example, this is a 2-bedroom apartment, brand new, 1,000 square foot. So if I talk about this, you will say, oh, really? Right, you see this? It's a brand new unit. Can you see this screen or no, guys?
Yeah.
The where it says submit point?
We can only see all the listings together.
Okay, so just give me a second. I need to share a screen and I need to share this one. Now, can you see that one submit point?
Yeah.
All right, so look at this one. For example, came out today. It's a brand new apartment, 1,100 square foot, 2-bedroom, 2-bathroom. And if we look at this, let's say mortgage calculation, you're gonna laugh at me on this one, but sure, let's say 430,000, and the 5% of that is 20,000, 21,500. Correct?
We can see your calculator. We can only see the listing window.
Oh gosh. Okay, one more time. I'll get there. Okay, can you see this? Can we see calculator window? Okay, so now the property is $430,000, and I put 21,500. I think I got the math right. And Jana said she can do it on 1.6% annual, 25-year, 5-year term. Look at that. So now your monthly payment is $1,651, correct?
Mhm.
I'm talking to Raman.
Yeah.
Okay, out of that, you are paying $542 in interest and your principal is $1,100. So
Yeah.
out of $1,800 that you are paying for somebody else currently, right?
Yeah.
You are paying $1,100 towards you for using this example. Okay,
Yeah.
and I'm gonna bring this back and bring you back to this screen. And then I know too many screens here, but we'll get there. Okay, where did the Excel go? Here it is. Now everybody can see this. So what I did in this, let's put it this number, right? That's your monthly mortgage. That's your EMI that you're paying, correct?
Yeah.
Now, when I go back to this listing, I won't bother you, but I know what I'm gonna do here. Now the strata fee on this is this much. The property
Okay.
tax gonna be about $200 a month. Oh. And the insurance is included, water and sewer is included in this case, hydro and gas probably $100 a month, right? Well, you're not gonna be able to sublet it. For example, you can have some students living with you, which is different, but I mean, when we are doing calculation for mortgage, we can't include that as your income.
Okay.
So potentially in $2,278, given and take few dollars here and there, you can own your own apartment. Make sense?
Yeah.
Right? Now I'm going to show you something different, and I'm going to do the same calculation for something which is more affordable in my opinion as a newcomer, and you don't want to stretch too much yourself, right?
Yeah.
So let's go back to this one. 2,200 might be a little too much for your thing.
Yeah.
And I want to see this. Okay, sorry, it's gonna be a little bit here. Now we can see this screen where it says unit 67, 1810 Summit Drive.
Yeah.
Everybody can see that?
Mhm.
All right, now I'm gonna try to do mortgage calculator. This property is also a 2-bedroom, 1-bathroom, 800 square foot, pretty decent. And look at these views. Right, pretty good. In my opinion, you can't complain about that. Condition looks pretty good. Almost as new as it can get really for that price. Now we go back to do the mortgage calculation for this. I'm gonna have to stop share and do share one more time. Right, okay, so now 239,000, let's say $24,000, 240,000. So we got the down payment of 5%, which is 12,000, and then we do 1.6 again, and then do 25 years and 5. Now, what's the payment? Raman,
921.
how much you paying?
600.
How much more you can pay and you can own a property?
300.
There you go. And what you're paying, you look at this number on this side. Your interest is only 300. Basically, what you're paying, you can own the property within the amount you're paying currently right now.
Yeah.
Right? So I'm going to take this number, go back there one more time, and then I want to find out $240 is the strata fee for this one. And where did I share? Okay, I lost it again one more time. Bear with me. Okay, now we are back to this thing. What did I do? In this box, I'm gonna put this 923. It was
923 or so. Yeah.
921. The startup fees is 240. The property transfer tax is going to be about $150 a month. Insurance included, water sewer included, hydro gas is probably $100 a month. Look at that. $1,400.
Yeah.
Now, does it make sense to own or does it make sense to rent?
No, definitely it makes sense to own a property.
Right? And then the beauty of it, when you are paying that money every month, out of that, 600 goes towards your own pocket.
Yeah.
So basically, you are only living there in $300. Plus, you have one extra room that you can still rent out to your friend if you want to. Although the Cali and Jana is not going to include as part of our calculation, but you can include as part of your own calculations, right?
Yeah.
So you are really living in $300, not $600 anymore. So these are the small little things. Now, how difficult is to get $12,000 as down payment when you are paying the tuition fees of $8,000 a month, semester?
Yeah.
You know what I mean?
Yeah.
One of the trick of this trade is, these ladies told me, if you are getting the down payment from your family back home, that money has to be here 90 days in advance.
Okay.
So that's why they say plan, plan, plan. Right? I'm just going to use this as an example. Rishabh, you can unmute as well yourself if you like to. That, you know, when you were back home, you wanted to come here. What were you doing? The first thing you did, you fill out an application for an education institution, right? And you hoped you're going to get a visa. That was just simply hope. You didn't even have all the papers together, right? Right or wrong?
Yes.
Yeah, you need to be honest. You are buying property for yourself, not for me.
Yeah. Of course.
Right?
Yeah.
So when you are buying property for yourself, you need to think about it. You need to do work. So when you fill out an application, you didn't even have the paperwork, or you are hoping that somehow magically something will happen.
Yeah.
The same thing is here. The Jana and Kali and I are gonna do something magically happen for you guys. And that will only happen once you start your application. Because that's why these guys telling us that the problem with the newcomers and the work permit holders, whether living permanently or temporary right now, they don't plan well enough. And if you plan well enough, you can own a property. It's not that big of a deal. If we don't have to own a 5-bedroom home with a basement suite because you can't afford it, right? I mean, if I go back and take you back all those same thing, let me quickly take you there, and then I can show you one more screen, and then I promise I won't be showing you any more after that. Look at this screen. Now we can see all this. Now what I did, I put home with suite, right, Raman?
Yeah.
Okay. So what's a typical mortgage for home with suite, Cali? Like 2,400, 2,500?
Mm-hmm.
2,500. All right. Now there is no strata fees, but the property tax will be like $300 a month, right? And now you're gonna have to pay insurance, which is probably gonna be $250 a month. You're gonna have to pay water and sewer, which I already know is about $100 a month. In some cases more, but let's say $100. Your hydro and gas will be $300 a month, right? Look at these numbers. Even if you get the income of, let's say you rent out the basement for $1,500, right? Now it's $1,950. And the down payment we need a house to buy is $25,000 probably, minimum, for $500,000 home. I don't even have $500,000 home, which you can rent out for $1,500 in basement. I don't even have that. Those homes are $600, 600,000 or plus now, right? So now when you look at these numbers, one is our aspiration. It's like, remember, we're trying to do an LPN program. Remember that?
Yeah.
But we didn't want to go to Williams Lake.
Yeah.
right? So that means if we cannot get to that far, we need to do something near, correct?
Yeah.
It's very simple. Like when I'm sharing this screen with you, that's what it really means. Like this screen, okay, where did I go? Come on. Oh, I canceled this whole thing. Okay, so now I'm gonna stop sharing. Let's talk straight. So what I'm trying to say that buying a house will happen. So if we are going to aim and try to save money for that, this property which is 240 now will become 300 in 5 more years. Then it will be beyond our capacity. And Rishabh, the same thing is really, right? So what is in our range is something that we can afford. Another important piece of this critical mortgage approval process is Kelly and Jana are going to look at how much money you are making every month, how much debt you have every month,
Okay.
right?
Yeah.
And they still have to give you some money to feed yourself. Not
Yeah.
everything going to go towards buying the house.
Yeah.
So maximum they will take about 50 to 60% of your total income going towards the house. So all you can really afford from what you're making right now, if some of you are making 40,000, some of you are making 60,000, some of you are making 80,000, right? And some of you are making less. So if you're making less, they can look at things for you, and you could pay 100% down payment, buy brand new, $0, like no financing needed, right? But that's not going to happen. Most places not. I mean, you wouldn't be in this discussion if that was the case, really. You would be just going buying yourself. But the fact is, we need to plan for it. um, if you have a down payment coming from home, that needs to be here now rather than 3 months later, right? And it doesn't need to be right now for everything. You could have half of it now, you can bring more, all the other restrictions that have. You are allowed to bring money to buying a home. It's not that you're not allowed, just like you're allowed to bring the money for tuition fees. The buying home is part of your livelihood, right? It's your living. They can't deny you for those. If you're going to invest in the real estate, or you are saying, no, this is not for my home, then you might face some legal challenges back home. But for now, to buy your home, that's all permissible. So these are the things that we want to tell you, that you can save a lot of money. You can buy just simply doing one thing, only one thing, and that's called planning and starting your application with the mortgage broker. Because these guys will do whatever they need to do, right? You have all your application, just like for your visa application, right? What did that guy do for you? He said, Raman and Shrishab, give me this paper. Now I need this paper. Can you give me this letter? Can you go get your NOC from this school or whatever, right? Or you go police clearance. So this is exactly, they are doing the same thing. And then once they have their visa application, sorry, not visa, mortgage application ready, right? Then they come and saying, Amit, I think now these guys are ready. We need to find them a property which is worth, they will always tell me a lower value, and I never agree with them, I tell you honestly, because I want you to buy a better home than anybody can think of.
Yeah.
And that's the reason of being successful. If you think you can buy a 2-bedroom home, my goal will be to buy you a 3-bedroom home, because I know you're going to rent out the extra bedroom and make $600, right? And that will give more money towards your down payment for the future home and all sorts of things, really, right? The fact of the matter is, you just need to get your numbers right. And I mean, all of you are university educated, right? Except Arjun. He's still working at it. But the fact is, it's very simple, and you got to treat it as an investment. It's your money going towards your own pocket or somebody else's pocket, which you have no hope of getting back, right? Now, when I showed you this example about 2-bedroom house for $240,000, you know how much that buyer bought that property for? They bought it about 6
8,000.
years ago. 6 years ago. Give it a guess.
120.
It was $160,000, right? Now, $80,000 is an appreciation on that property, right? In 6 years, correct? Now, you take that $80,000 and you are already saving $600 a month for 5 years. If you do the math, 16 times 6 times 12 is 7,200. If you do 5 times, that's $35,000. So actually more than that. Your $80,000 and $35,000, how much is, Jana, that? That's $115,000, right? That's a lot of money for you to now buy a house, because now you're going to have a wife, you're going to have a husband, you're going to have a children. They can use the house, right? And then you can expand yourself. But if we just keep dreaming about buying a 5-bedroom house, and that is always like a Taj Mahal beyond our reach, that's pretty much it. So I think what I would like to see personally out of this, everybody, we're going to have this video release right after this, Arjun?
Yeah.
Thank you. Everybody just need to make one-on-one appointment with Jana and I, because we cannot discuss your personal detail on this. I will be fired tomorrow. The fact is, we do personal one-on-one meeting. We start your application process, right? And then we take you step by step. You don't need to buy tomorrow. You're not going to buy tomorrow. You're going to buy 2 months from now, 6 months from now. We need your money here to buy the property, right? But if we wait for every step to happen before you take your step, then we are just waiting forever. And it's like, really, you have to write your assignment. Your professor won't write it, right? I mean, you're going to have to fill that application. Jana and I can't do that. So my point is, we just need to do a little bit of math. We are very smart and sensible. We don't need to go and buy a 5-star home with all the things and $1 million property, which we can't afford, right? So baby step in this case. And I can tell you from my personal experiences, where I live, I invested in this property for $245,000 in half duplex in Kamloops. Now, I'm pretty sure if I put $400,000 in the market, there will be a lineup of people outside. So how much money I made in 10 years, 11 years? I have 160 or 100 and actually I think $180,000 sitting in my house. If I sell it, I can take that money and I can buy a bigger house anytime I want, right? I mean, would you agree with that, Jana? And that you can use a lot of, say something about that.
Oh, yeah. No, absolutely. I always say it doesn't have to be, like you're saying, the house. It needs to be sometimes a stepping stone, right? So my personal experience is we bought a house, oh goodness, probably 11 years ago now. And we had a suite upstairs and a suite downstairs. Keep in mind, this was 10 years ago, but we now have rented that house out up and down and have moved into a bigger house that fits the family. So it just needs to be a stepping stone. It doesn't have to be the big house right now.
Yeah, and thank you, Jana. And really, at the end of the day, this is the best part for me. I am paying for my own property, right? I'm not paying for anybody else. That gives me comfort. That gives my parents comfort. You know, the first time when I bought this property, you know, my mom said, she said, oh, your dad didn't even start buying a property until he was 45. And you bought at 41, right? So I think it as a traveler, you know, the visitor to this country, and when your mother tells you this, it sends you a very good sense of belonging. That's what I think personally, right? And gives you, okay, I'm in a good place. That's what my mother thinks about this, right? So, I mean, for somebody, it may be a small thing, but for me, it's a big deal because it's assurance. It's assurance that you are in a good place, in a good time. And no matter what, real estate purchase will be the most expensive investment you will ever make. Because there is nothing, I mean, even the businesses don't go as high as buying a property for your own living. I mean, I don't know how many businesses sell for over $500,000, but a lot of homes sell for over $500,000, right? So this is the fact that this is the largest investment of your life. You need to take it a little bit seriously. You need to do a little bit of homework, but numbers are telling. We can achieve that goal. as long as we are prepared to make that application, make the first step towards getting there. And it could be 2 years from now. I'm not saying it's going to be next year, right? For some of you, it could be 2 years from now. But at least you are on a right track to be there. You know what you have, what more you need to get there. And if we don't take the first step, we will never know where we are and where we need to go. That's what I think. Any other question you have, Rishabh or Raman? We're going to do one-on-one with you guys as well, because some of the personal things we can discuss here. You know, you can't say, I mean, I ask you general question, how much you pay. I know the situations kind of thing, right? But we won't say, okay, how much money is in your bank account kind of things, right? So that will be against the rules for us. So any question, please ask, because it's 7:45. Satnamji, do you want to add anything? I mean, I know you are a highly experienced realtor yourself, so.
Not exactly. Just my question here would be, you know, is somebody who's already on a work permit here, they've applied for a permanent residency, they will qualify. My understanding is from this discussion that they will qualify to buy a property here. They don't have to pay any foreign buyer's tax in this picture. Am I right?
I'll let Jenna answer that, but the foreign buyer tax only applies in 3 jurisdictions, and some people are exempt from that, right, Jenna?
Yeah, so my understanding, and I can get further clarification, is that there's no foreign buyer's tax in the Kamloops area. There's, where is it, Kelly? Toronto, Vancouver.
So in BC, it is in Vancouver and Kelowna.
But as far as in the Kamloops area, whereabouts are you located?
Vancouver.
Okay, so I believe there is in Vancouver.
Yeah.
But up here in the Kamloops area, we don't have it. So Vancouver, Kelowna, and a little bit of the Okanagan over by Kelowna does, but not here in the local Kamloops area, not in Merritt.
No, my question is, if they've applied for, you know, permanent residency, then they're already in the process. The application is in the process. So I don't think there is a foreign buyer tax applicable to them. I just want to confirm it with you guys.
Okay, so maybe we should, what I'm going to do, I'm going to call my lawyer, Ramir Mattu. He knows about British Columbia. Jenna and Callie, could you please also find out from your sources?
Yeah, so with the foreign buyer's tax, the way, and when we talk about our mortgage, My Mortgage Toolbox app, it actually goes right into detail of each person's specific details. So it would actually calculate, if you needed for that client, it would actually calculate out, does this client qualify for the foreign buyer's tax or not? Is it exempt? Where does it actually fall? So I'll just run a quick estimate for you, because I've got it up here. So says that they have to be, and again, this is just taking everybody's, but if it's in process and we don't have a physical document that the lender is going to require, that's where I think there could be a little bit of a gray area depending on where that paperwork is actually sitting.
There is email from them that the process, the application has been accepted and it is in process.
Okay.
I spoke to a lawyer here and he said, as long as they have already applied for it and they have a documentation for that, any kind of proof in terms of email also, they should be fine.
Yeah, so, and again, all the lenders and the default insurers, when we're talking like Sagen and Canada Guarantee, they're just going to ask for that documentation up front. So again, Jenna and I and Amit cannot stress enough of why we need to plan so that we know each person's situation of where they are in coming over, where are you at in school, where are you in the work permit transferring over into Canadian residency. And that way we have it all for each person. Their lawyer has everything set for them. This is not about, this is a team. This is your realtor, your mortgage broker, your lawyer, your appraiser. This is a team working for you to obtain home ownership in Canada. And that's really what I say to the consumers. But as long as I can't, like in my experience, as long as we have paperwork to provide to the lender that's in place.
It should all work, right?
Yeah, and if that down payment also, it has, if this is a purchase, owner occupied purchase, those funds I would assume need to be in Canada for 90 days.
For 90 days.
Yeah, to avoid that foreign tax.
Okay. Okay. Got it. Got it.
I quickly share one story of what happened yesterday to me. There's again former friend of mine, student of mine. He was working at a store. He started working with this case, and yesterday he told me that he started working with Highland Copper Valley. Now, all of a sudden, you have a new employer, you have a new job. Yes, it changes the game because you have to be stable for 90 days and so on, 60 days or 90 days, Kelly, right? One or the other.
In a job,
Yeah, if you move
You
to a
have
new
to be
job.
off probation.
you have
So
to
it
be off
depends.
probation.
Yeah, it
Off
depends.
probation.
With,
Yes, okay.
yeah.
Let's say he has a 90 days probation. But what it does, all of a sudden he has a bigger paycheck, right? He has a bigger and stable employer. And Kelly and Jana will be like, ho, now you can buy a $400,000 versus $300,000, right? And all of a sudden, why? Because they already have all the documentation on you. They already know all the other histories on you. All they need to say, now change this number. Your new reset date is this. You got all your money in now, right? And now we can talk different, right? And when we don't have anything, right? There is no way you're going to be able to buy anything. So my final takeaway will be, unless Callie and Jenna want to say something about that, and they should, because this was really for them, that start talking to us one-on-one. Start filling out the application. There is no cost to filling out application, and we are not asking anybody to sign the buyer agency or like exclusive mortgage financing. I mean, if we don't serve you, you go somewhere else. We are more than happy to let you go. We want you to be happy. That's the whole point of doing this, right? And let us know why we can do it for you. I'm the one telling I'm the best realtor in town. That's what my coach always says. And that's why my numbers are so good this year, because, you know, what he told me, you got to make your client's goal number one goal. Your goal is to buy the property. My goal is to help you buy the property. Jenna's goal is to help you buy the property. But that has to be your number one goal as well, right? And that's why I told my coach, what if their goal is not number one goal to buy the property? Then say they are not your right clients. That means I'm just wasting my time and your time, same time, right? So we need to be a little bit different about this. We need to be serious about this ourselves, and then take the first step. Because unless we think it's the right thing for you, we won't be recommending you to either buy the house or to take the mortgage or to commit to anything, because we're just not allowed to do that. All right. Anybody has any final questions or comments? Jana?
No, again, just planning.
Yep.
We are going to ask you a lot of questions. Be prepared for that. We are going to need a lot of information. I just want to prepare people up front. If you just want to run some simple numbers, then I encourage you to download our app and just play with some numbers on some of our calculators there. It's very interesting. It'll give you, based on your current situation with your income, it'll give you some numbers about what you would qualify for, as well as the additional costs that you need. So again, yeah, thanks so much for having us. Appreciate it.
Satamji, you have any final questions or comments?
So thank you for arranging it, Amit. It was really very nice of you. And I really got good information.
It's all Arjun's fault. Yeah, anything good or bad happen is Arjun's fault. I do very little. My job is to talk. Arjun's job is to do. So, you know, I blame always on Arjun, and he has been exceptional in this.
Yeah, he's doing a good job.
Thank you.
I've got a question. So let's say one of us, maybe Raman or Perry or Panit or somebody decided, hey, okay, you know, I want to proceed further with this. So if they're contacting, let's say, Jenna or Kelly right now, what kind of documents should they send you right now? What should they collect from their employer so that they can, you know?
I want to answer that question. Send them an email saying, I am interested in buying a property. Help me out.
It's that simple.
That line always works. It worked for me from India to Thailand to Ireland to Canada. Dear professor, I'm interested in this. Please help me out. And how many degrees I have, you know that. It's very, when you sell somebody, please help me, then the obligation is on them to help you. Right?
True.
Any questions from anyone else?
Very simple. Some people call it expertise, some people call it whatever, right? But I think you should start with a simple email saying, we want to do this. And because they're going to send you all the information through email only, right?
Yeah.
Yeah. So that's the best way to do it.
Thank you. Thank you, Amit. Really appreciate
Thank
it.
you. Thank you, Raman. Thank you, Rishabh. Thank you, Perry. Thank you, Parneet. And thank you, everybody. Kelly, Jana, Satnamji. You guys have a
Thank you
great
so much.
night.
Thank you.
Thank
Same
you.
to
Great
you.
Christmas.
Merry
And-
Christmas.
and-
Everybody,
Yeah, Merry Christmas, everyone.
Thank you,
Yeah.
everybody, for
Bye.
joining.
Thanks.
We'll resume. And Raman and Rishabh, you can send us an email. We'll get you started, and Perry and Parneet as well. All you have to do is send me an email or send these girls an email, and we are on it. That's what
For
we do.
sure.
Thank you.
Okay,
Everybody,
thanks
good night.
everyone.
Right.